I wanted to make a quick video on technical analysis and stock trading while the market was actually open. Excuse the mess. I literally just moved in this place and the sound is awful. Everything's awful. I got boxes everywhere. Yeah, so the market's open. Basically, I just wanted to run through some of the things that I look for when I'm trying to predict which way a stock is going to move. This is the chart setup I normally have up on Thinkorswim. If you trade stocks regularly, you have some kind of a platform that you use like E-Trade, TD Ameritrade, Scottrade, Schwab. There's a million of them. Draw a trend line like that. I can draw a trend line that tells me like this just broke the trend going sideways on Apple, signaling that it's going to go down. There's not a whole lot of momentum to the upside. There's also support and resistance levels. As you can see right here at 153, what was the high? 153.78. So 153.80, right in that range. Seems to be pretty significant support and resistant range right here. It's bounced off it quite a few times. If you know which way the stock is moving, you know what to buy. I just purchased some options actually on NIO, using these same tactics, the what's called the trend lined, or support and resistance lines as well. There's about a million different things that you can look at with your technical analysis. Like all of these lines right here, these are your moving averages. You got your 20-day, your 50-day, your 100-day, and your 200-day moving average. As you can see, this came down. This is only the 1 minute. NIO came down, bounced here at support around $40, and then came up and hit the 200-day and bounced. And now it's getting squeezed between the 20-day and the 200-day, right? Or the 200 candle would be more accurate because it's not the day frame, it's the 1 minute frame, and it goes on your candles, not the times, not the actual day or whatever. It depends on what you have your time setting set to in your chart. So you can pull this back to get a longer view of what direction the stock is moving in over a longer term. Pull out the 5 minute. You can see that it's bouncing, maybe get rejected here around 40 and a half or so, just under 40 and a half, maybe get rejected. If it breaks through this, then I know it's going to continue to the upside. So I'm going to pull back even further, 15 minutes, 15-minute candle. So generally I look at the 1 minute, 5 minute, 15, then I draw back to the 4 hour and 1 day. And that gives me a pretty good idea of where it's going. Like over the longer term, a 4 hour, 39.87, 39.80, that is very strong support. That is the 100-day moving average on the 4 hour time frame. So if it breaks through this downside, I know that it's going to go down, find some support around 39.19 or 38.74. That would be pretty strong. Now, generally the way I look at things is there's a lot of indicators, there's a lot of different things. Couple them together. You need to have 2 or 3 indicators, 2 or 3 formations, 2 or 3 trend lines, support lines that coincide with each other, right? Because the more indicators you have that point a stock in a certain direction, the higher the chances that the stock is actually going to move in that direction. If it's moving down, it's looking for support. If it's moving up, it's looking to test resistance. So we're going to go back into the shorter time frame here. We're at 5 minutes and look at the short-term uptrend of the stock. So I'm going to change my tool to the line so I can draw a line, and we're going to go from the bottom point of the new breakout, bottom point of a breakout, and we can see, and then drag it across the closes. Okay, so this broke the uptrend this morning during pre-market. A lot of times they'll break the downtrend and they'll find support somewhere and create a new trend line. That's what I think is going to happen here. I don't think this is ready to plummet. It does have pretty strong support in that 39.70 range, 39.80. As I was saying, plus $40 is a pretty significant level for people. So it could fall. And if it does, that means that I'm going to lose a little bit of money. It's not the end of the world. I bought some options. But there is also a shorter, weaker trend line from pre-market to the open from 2 days ago that puts it, right at 39.90 at the moment. So this trend line, it will come along and bounce off of that, ideally, and then move to the north. Now, as far as the resistance goes, let's move back on our time frames again. Resistance, strong resistance. It's got resistance at 40, 60, which it has already broken twice. Okay, $41. If it can break above a previous tanking session, if it can break above the open of a tanking session, that's a very, very strong bullish sign. If it breaks this 44.65, then it's to the moon. So it has room to run from where it's at right now to 44.60 with some support, with some resistance along the way. So the strongest resistance being around $41. After if it hits 41, it's got plenty of room up until 43, $44. Let's look at the 1 minute chart on Apple and see how well we can predict which direction the stock is going to move by drawing just a standard trend line. Just a trend line, nothing fancy, nothing spectacular. We're just going to zoom in. We're going to draw a trend line from the original breakout of this trend, which would be this one or this one. They're both significant in trading. So this has broken this trend line to the downside, and then it's going to come up like it most of the time it will come up and touch the bottom of that trend line to the upside after it breaks it. That's a pretty bullish signal if it does that. Now, it doesn't always do that, but if it's going to be a reversal, it will come up and touch the bottom of that upward trend line and then decide if it's going to break back through it. And if it does, then you have an entirely new trend line, which would be the bottom of that new low for the trend line, because it's still a higher low than this, right? So technically this is still an uptrend, right? Technically this is still an uptrend. It's not moving with as much velocity as it was before, but you have so from this breakout candle, this strong green breakout candle here, that is our trend that it is going off at the moment. So when this turns around, if this Apple turns around and comes back down, breaks 153.99, which is where this trend is ending, this trend line is ending, and it's not doesn't have a lot of momentum. You know, it's almost a straight line. The closer a trend line gets to being straight across, the higher the chance of the stock just completely reversing. So this trend line is sort of on the last leg of the trend. So it needs to make a big move to the upside to create an entirely new trend line that has more momentum and more strength, or it's most likely going to come down. Now, this is only over the short term, right? This is just for today, tomorrow, right? The next couple days. This is only 1 minute chart. We do have a 3-day weekend coming up. So if we pull back on the chart, we can do that same exact thing on a longer term. So over the course of a few days, we have this original big, strong green breakout candle. If we draw a trend line across the closes of the subsequent candles, or the candles from those days on, from that day forward, then we can see that the trend line for the 15-minute over like a 5-day period puts us at 153.50. So if this thing does break to the downside, I would be looking to buy stock on support at 153.50. Right now, before I say that with definitive, I would look, before I say that as a definite, I would look for support around 153.50 as well. And it just so happens that we have it. The original breakout, 153.50, right? It's bounced here. It broke through here. It held pretty strong here. So 153.50 is pretty strong support here. And as you can see, our trend line and our support line both line up at this same spot. So if this thing were to fall, 153.50 is a very significant number. I would be looking to buy there on the turnaround. Now, I don't know that it's going to do that, but now I have a very strong price range set that I know is significant, that I know is going to have strong results one way or the other. So that's I can set an alert for whenever it hits 153.66, create alert when it's at or below 153.66, and move on to another stock. Go back to looking at NIO as an example. Now here we can do the same. Here we can do the exact same things. There's a couple of other things going on here with NIO, such as big dumps to the downside, and then the stock came back up and reclaimed those dumps multiple times. We had a big pre-market dump a couple of days ago, and as soon as the market opened, it jumped up right past the original sell-off. So that's a very bullish signal. That means that the investors, the people who are buying this stock in particular, NIO, have a lot of confidence in the company itself. It does look like we tried to have a breakout and it didn't quite make it past this 4102 level, which is okay. Generally on whole dollars, I like to see $41.02. It's not very strong for me. It is bullish signal, but personally on whole dollar amounts, I like to see it break that amount by 5 cents, then come back down, and then go back through and hit 4107. So the original break at 4105, and then the second break at 4107. That's very bullish and that it's going to go to the upside. Now it's the same thing on the downside. This is also given that you don't have other support and resistance at that 4102, 4105 level, because if there's strong resistance at 392 or something like that, and it broke through that significantly, then that's going to play a larger role. But generally speaking, strong levels, whole dollar, half dollar levels are strong psychologically for people. So if it breaks it by 4102, then it just sort of kind of broke it. It just sort of kind of broke 41, right? Not everybody's looking at 4102 and saying, oh yeah, it's solid over 4102. Not everybody's doing that. But if it hits 4105, 4107, then you're like, yeah, okay, it definitely broke it, right? It's not marginal. It's clear. So it makes it easier for people to have confidence that it's going to continue to go that way. So if you can couple the breaking the support and resistance with the upward movement of a trend line, then generally speaking, you should be able to predict the way the stock moves. I mean, you might not be right every single time, but you really only need to be right 60% of the time for you to make money in the stock market. Now, NIO, let's look at NIO on the short term. Let's pull up the 1-minute chart, as it looks like it's consolidating. As you can see, we had a bit of a downward spiral for this thing today, which I wasn't really expecting, but we do have right here, let me change my tool again. We do have some points of a triangle that we can draw, right? Let's be artists today. Let's draw some lines. So we have a pennant, right, at the top of a reversal breakout. Okay, now this needed to get above, what is the high? 40.24. So it needed to hit 40.26, really 40.27 because of the psychological level. And where did it hit? It hit 40.28. So that's good. Now we do have some resistance here at what is the high is 40.31. 40.31 on this original dumping candle. So that's our next real point of resistance. and it's bouncing off of the support of these candles as well, right? The top of the last support levels, so which is 40.07 in that range. So it's at this triangle. All these moving averages are coming together. It's going to squeeze hard either to the north or to the south very shortly. As you can see, look at all of these things coming together. You get your 20, 100, 50-day moving averages all coming together, and your downward trend for the short term for the last hour or so, and your upward trend for the last couple of hours. So this is a pivotal point in the direction of the stock. So we can literally just watch this candle and watch this play out. It'll come back and test this, extend to the right, extend to the right. It will come back and test these lines over and over again until it gets so tight that it has no choice. It has to go one way or the other. You know, stocks don't like to make strong decisions, right? People don't like to make strong decisions. So until they're forced to make the decision. And with these moving averages and these trend lines coming together, everyone that's in this stock is being forced to make a decision to whether it's going to go north or south, right? The only way that they're going to be forced to make a decision is with all of these technical indicators squeezing together, coming together, saying, you got to do something, man. You got to go one way or the other, right? You got to do something. You can't just sit there. You got to move. So it's at 40.14. Okay, so it broke it to the upside. So what does that mean? Boom. What did I say? So now let's watch it run. Let me pull back and you can see the significance of it there. See, so it broke that downward trend and the moving averages. So it popped pretty good. Because as soon as it broke this, you had all these day traders that came in and said, oh, it broke it. Hurry up, buy it, right? Now, if it comes back down and it touches the tip, be very wary, because all that means is that it's creating an entirely new triangle. So it's not quite a false breakout, but it's just creating a new triangle. So basically this would be a false triangle. It's not the triangle we were looking for, you know? But generally speaking, when it breaks a triangle like that, that's clearly defined, a clearly defined triangle, it's going to pop and it's going to go whichever way it broke the triangle. I like to use perfect triangles, like in my crypto trading. I actually have a, is it in here? No, I actually have a protractor that I hold up to my cell phone that I can use that tells me if it's a perfect triangle, right? Sometimes I'll even hold it up to my computer to tell me if it's a perfect triangle. Now, there are tools for that, but I'm old school, all right? I like to use screwdrivers and drills and stuff, okay? If I could take a stock and I could bring a hammer to it and hit it with a hammer or smack it with a golf club, I would, right? To the moon. That's what I would do. I would take a drill and I'd put a high-powered 500 horsepower motor on it, and I'd let it run to the moon. But this indicator that I'm telling you about right now, the pennant or the triangle, the downtrend, uptrend, most books, most things that you're going to read are going to say that it needs to be at an end of a run. It needs to be at the beginning or end of a run, or it needs to be down, you know, at the end of a big drop or a big spike. It really doesn't, you know, it's just consolidation. It could be going sideways, create a triangle, and then break one way or the other. I've seen that before. There's many times. There's a lot of indicators that are out there that when you couple them together, you can pretty well predict the way the stock is going to go. Multiple times I've looked at these exact same indicators that I'm talking about right now, the pennant, right? Just the pennant and consolidation, coil, very strong, very common, see them all the time, very reliable. They can predict when news patterns are going to happen. I mean, there's no lie. If you have a candle like this, right, and a company wants their stock to break to the upside of that candle, or if you have a formation like this on a day chart and a company wants their stock to break to the north side, to the top of that triangle, they'll try to release news to get it to pop over that. It's stock manipulation and it's illegal. Most times they'll do it in a way that looks like it's not stock manipulation. But I'm telling you right now, it 100% is. They know these things. They know this technical analysis. So they understand that whenever people see these formations, they're waiting to see if it's going to pop. So they want to put news in that's going to make that formation complete, that's going to make that formation happen. Right? And here's this triangle that I was talking about, and look what it's doing. It's breaking to the upside, you know, and I could have predicted that. You know, if I wasn't making this video, I probably would have bought some more right there when it popped over the top of this downward trend right here and completed this triangle and broke through it. I would have bought some more of it, right? But I'm making a video for you guys, so hopefully that was worth the effort and worth your time and worth mine. Hopefully it helped you because it kept me from making a little extra money, but you know, what are you gonna do? All right. At least slap like and subscribe. You know what I mean? Like I know that I don't make a lot of, I know that I haven't made a lot of financial videos, but the reality is I know quite a bit about it. I've been doing it for a long time. So hopefully you guys enjoy it. Hopefully some of the people that subscribe to my channel actually want to learn how to make some money. So they don't, you know, have to have a crappy 9-to-5 job that they hate and don't want to work, right? Now, these things that I'm telling you as well, they don't just apply to the 1-minute day trading chart. You can use these exact same strategies for swing trading, for finding a good entry on a stock you want to own for 10 years. I mean, it's literally the same across the board. They're more reliable the further time frames that you go out, the more reliable they become. Learning how to spot them is the hard part, but most of them that you can look up and find that are generally used, which are based on psychology. So it's not like someone saying, okay, let's make this formation. No, it's based on human psychology. Most of these are very reliable on the day charts, right? So the 1-minute, the 5-minute, and the day charts, because if it creates a formation in the 15-minute chart, right, it may not be that exact same formation in the 1-minute chart or in the 4-hour chart or in the 1-day chart. So it's important to pull your time frames back on your charts to look and see if it's creating a formation at any time frame, at any, you know, specific time frame, to give you a better idea of if a formation is going to fail or if the stock is going to go a certain way and create a formation. Because if you can get into a stock before it creates a formation, if you can get in the beginning of a pennant or the beginning of, you know, a triangle or a head and shoulders or, you know, whatever, teacup, whatever kind of formation you're looking at, if you can get in the beginning, that's when you make the most money. And now it popped up over the 200-day moving average again. So it's got a lot of room to run. Let's pull back to the 5-minute. It's got a lot of room to run up until 40.35 is kind of the next real resistance. And it needs to break 40.50, 40.5 to run further north, right? So my guess on this one is it's going to come to around 40, right in this range. And that's going to create our new 5-minute triangle. So it'll look something like this, give or take. Now, it hasn't come and touched this prior, right? It's not a very clearly defined one yet. So there is a chance that this could actually come down after it hits that. It could come down even further. But that's what the stock market is chance. So I'm going to let it ride. I'm going to let it run. I'm going to see what happens. You know, this downward trend that I'm predicting is going to be the case is not exact. I just know that it's going to stop somewhere in this range and turn around for a little bit. For how long? I don't know. I'll have to wait till the indicators show me which way it's going. For example, the stochastics came down right here and turned back around. This is on the 5-minute. Let me pull up the 1-minute. So it doesn't have much room to run back up, and it looks like it's going to have a rally. But, you know, whatever. My camera died. My camera died, and who cares? What we're looking at is the stock. We want to find out if the stock is going to do what I predicted it to do just a minute ago. And I wanted to say, too, one thing to watch after a rally on the stochastics is if the stochastics comes down faster than the price, right? If this right here, if this is overextended and it comes down faster than the price moves down, right? At a faster decline of this than the price, then that means the stock is building up to shoot back up. So this price right here, this stochastics going down and the price staying flat is what you want to see, right? If you see it going down and the price is still going up, then hold on to your socks because you're about to go for a ride. As I see it right now, this is going down. This was actually going down as the stock price was still moving up, right? So if this tanks down to 40.18 or tanks down to 40 something, the stochastics will bottom out and it will turn around, right? As long as we don't have any strong sell-off, strong red candles, you know, from some hedge fund that's trying to dump the stock or anything like that, I think we'll be just fine. While we're waiting for that to happen, let me zoom in on Apple over here too. Extend this to the right, extend to the right, and as you can see, it's still playing off of this trend line that I drew. And it wasn't a perfect trend line, it was a sloppy kind of trend line, but you can see that it's playing off of that trend line. I mean, look where the tip of this candle went to. You see that? The tip of this candle went right to my trend line. So if it's going to break over that trend line, then it's somewhat significant. It's maybe not the most significant, but it's what people are trading on right now. I mean, you can see how this is important and how it affects the decisions that you can make in trading and what direction a stock is moving. But I'm just going to shut up and let's see which way NIO goes to see if I predicted it correctly or not. Real quick, while this is still moving, I just wanted to point out Apple. It did break this trend to the downside. There's a very good chance that this is actually going to fall. Right? It broke the uptrend to the downside, 153.50. So I may actually be looking to enter this. And if you look at the long term, or a longer term 1 day or 1 minute on this, you can see it sort of created a coil. It almost created a short-term 1 minute coil here, right? So we're going to be watching this right here. This is a very strong signal that it's going to go south. Now let's look back at NIO too. NIO is still kind of waning. It bounced off the 200 moving average. It's closed above it a few times already. So as we go further to the right, this drawing that I drew, which isn't perfectly accurate, like I said, because there's nothing for me to base it on. I'm just making a guesstimate of where I think it's going to land. 40.5, 40, based on of this right here, because it wants to come back and test this 40, 47, 40, 50 mark to see if it can get above this original dump. So it wants to test this area. So my guess is it will come to hit this right around the same time that our triangle hits that. So perfect triangles. Perfect triangles are very good indicators on what you can do. I've noticed it with crypto even more. Crypto, because there's such high volume trading and so many inexperienced traders, perfect triangles happen a lot. I mean, like a lot. So if you can pull a perfect triangle, if you can get points on a perfect triangle, you can have a pretty good idea of which direction the stock is going to go. That's not quite a pennant. You know, a pennant doesn't have to be a perfect triangle. But if it's a perfect triangle, then, you know, it doesn't get any more perfect than that. It has broken that downtrend. Like if we wanted to draw another line here to here, there's our perfect triangle. See? Right there. Well, when you zoom in, it's not so perfect, but remove drawing, and here it wants to continue to the upside. As you can see, it just broke another downtrend from here. So it broke that, which is telling it, yeah, we're going. And then it comes back. See this very significant point right there. This line, this downward trend is a very significant point. So it's breaking through this with enough force, hopefully, to continue on a higher move, which our perfect triangle remove drawing. Let's see. Where would a perfect triangle put us on this? Something like that. Yeah, our perfect triangle will be something like that. So we have one short-term indicator. Yeah, our perfect triangle would be something like that. So we have one short-term indicator that's telling us that it's moving to the north, at least for the next 2 triangles or so, 2 perfect triangles or so, 1.5, 2 triangles. And then we have to reevaluate and see what is happening with it as time goes on. So right now we know we have a bullish signal to the north. It did have a little bit of a rough morning here. So we're looking for this to break above 40.5, right? Because that is the high of this original dump right here. This original fall to the south is 40.5. So if it's at 40.52, then we know we're good. And then our next resistance would be 40.60, which I'm sure it would break through if it broke 40.52 because it's psychological level. So 40.52 is the level. That's what we need. We need 40.52 for it to matter. And as you can see, the stock's fallen a little bit. And we go and look at our stochastics. So it's fallen a little bit, hit a moving average. Our stochastics dropped down a lot with the stock falling down, which is good. Because if the stochastics isn't falling down when the stock is, then it's going to plummet. But here's back on Apple again. What I was saying is the stock is going to fall because it broke my line that I drew. And look at it. Phew, falling down big, right? Apple. Let's pull it up. See, look at this. Man, that's scary. That's scary. It's almost it's good that you can predict it though. Look at it. Look at my lines. Boom, it broke through the downtrend, or it broke through the uptrend right there, right? We knew that was going to happen. We knew that was going to happen just by looking at it, just by drawing these lines on a chart, on a thing, whatever. It's nothing that anybody can do it. It's not difficult. Boom, it's fallen down. It's going to find a little support around 153.75, probably get a little bounce, more than likely. If it doesn't bounce and hold at 153.75, then 153.50 is the next real line of support, right? So this one we're going to be watching to see if it's going to play out that way. But I can tell you, just from my experience, it's going to at least make it halfway there. At some point, it's going to make it halfway there. Let's go back and look at NIO again, which we've been watching with hoping for our perfect triangle setup, which, what did I say before? It's going to create that second point around 40.50, right in that range. And then if it breaks through that range, then, it's very strong to the upside, right? That's saying it's going to create a pennant. It's just basically a sideways pennant that it's going to create. It's a coil, it's coiling up. And look what it's doing. It broke my triangle to the downside. It's going to continue to go up. I don't know that it's going to stop right here. I just drew this because it's a guesstimate. It's not very accurate. We can also draw an uptrend from the breakout to the peaks, right? So we know that it's got room as far as the trend channel goes, the trading trend channel, which would be about right here. We know that, see, and look where it stops. Look where this trading trend channel stops. 40.50, 40.48, 40.50. So it's got room to move to the top of this trading trend channel, because this is the channel that it's trading in for the trend. Jesus. Which would put it above our perfect triangle mark. So this is, this is basically how you predict where a stock chart's going to go, or how you predict where a price is going to go, is based on the start, based on some lines. You draw some lines on a chart. That's what you do. You draw lines on a chart, and you go off of the peaks, you go off of the dumps, you go off of the spikes, you go off of the closes. Those are all important. Those are the important things. Okay, now Apple looks like it fell down considerably. Where did it find support at? Let's look and see where Apple found support. pretty strong. 153.80. So it didn't quite make it down here, right? So that's a pretty, it didn't quite make it to the 153.70, which is a pretty bullish signal. Now, if it can reverse completely and break over, what's the high? 154.04 from this 1 minute fall. So if it gets to 154.05. So if it gets 154.07, 154.07, it's going to come back and hit the bottom of this trend line here, which is 154.11-ish. If it breaks over to 154.11, then it's to the moon. Reverses immediately. If something plummets and then reverses immediately, that's a very bullish signal. It's a very strong sign that the stock is going to continue north. The reason why it didn't here, because this is the open, right? It opened up here. It opened down here and it spiked up to 154.63 and then went down and it came back around, took another run at it, and the high on this one was 154.62. So it didn't break the 154.63. That's why it's gone sideways for the day, because it said, oh no, we didn't break this high of the day. So does that mean it's done? Does that mean we're done? And everybody just spent the rest of the day trying to figure out if they were done or not. You know, we're at lunchtime, so we have all the people that are, you know, working through lunch, the sweaty people that are, you know, tryhards, super sweaty. They're the ones that are dictating the stock price movement right now. Super low volume. You know, if you've made enough money today, you're probably not trading at lunchtime. As you can see, I'm here at 12:40. So, but Apple looks like it wants to go up. You know what I mean? And it does have some room based on our trend line that I just drew. It has some room to make it to 154.11, right? It does have some support at the 20-day moving average and 200-day moving average. It has some resistance at 154.04. So if it breaks this 154.04, I'm pretty confident that it will go to 154.11 and maybe higher, right? If it reverses and goes past this trend line, then it's to the moon. It's going to go back up to retest this 154.63 area. If it breaks past this trend line, because that means that the bearish signal, it just completely ignored the bearish signal, essentially. That's what that means, too. If you have a signal that's telling you it's going to go south and it decides to go north instead, then that means that it's going to go north for a hot minute. Same thing is true for the reverse. If you have a stock that's telling you it's going to go north, all the indicators are pointing north, and for whatever reason the stock still plummets, you know, don't buy it. Don't look for the turnaround on that one, because it's crashing. You know, let's pull up NIO, see if it did what I thought it was going to do. Looks like it's still trying to. It's finding support around the 200. I don't like it whenever it sort of rides the 200 moving average or rides the moving averages. I don't really care for that too much, because it's easy for it to break through. All you get is some one asshole, one a-hole hedge fund manager who's like, oh, it's right in the line, and he sells 10 million shares. But as you can see, it's going down a little bit. It's going sideways, and the stochastics is dumping. So this is building up a lot of steam for it to take off, right? So it's possible that this thing could take off. The stochastics went all the way down, and the stock price did not fall heavily. It came down a little bit, but the stochastics did not. Or the stochastics came down a lot, but the price didn't come down as much as stochastics, right? You see the difference in variation here. This came down a little bit. This came down a whole lot, right? So it's building up steam. It's got strength behind it now. Basically, it took a breath. Right, this is the stock breathing. This stochastics right here, that's the breath. It's taking a breath. Okay, so it's basically getting a second wind here right around lunchtime, 12:45. This thing just dumped down, and now the stock's saying, okay, ready for round two. While that's running, let's go back and look at Apple. Now, Apple's doing the opposite, okay? Apple's stochastics going way up, stock price is not moving. all that much, right? Now, Apple has a tendency to rally a lot and kind of ignore the stochastics, but it can't ignore them forever. So the stochastics have gone up. This is 154.03. It's finding that strong resistance that I was just talking about. And it needs to break through that it's at 154.04. So it needs to break through that. There it goes. Let's see 07, 154.07. Let's see it if it hits 07. And it's at hit 06. It hit 06. 154.06. Come on. It just needs a penny, man. It just needs a penny. That's all it needs. Just needs a penny. Now, it did break the top of this mini dump right here, the first side of the dump, but it has to break the second side of the dump for me to be interested in it. Now we've got a couple of more indicators here that we can draw lines off of, a couple of more peaks and valleys that we can use to draw some lines. We're watching the stochastics to see how they interact with the price action, right? The price action plus the stochastics and the volume, that's kind of what we're looking at right now. And this is dumping down. As you can see, it did not come back up to test the bottom of this upward trend line, right? Which is sort of our last leg of a trend right here. Because if you draw one across this, it's more or less just a straight line, and that is not a upward trend line. That is just a line. So because it didn't come back up, it's showing a lot of weakness. It didn't come back up to test this 154.11, 154.12. So it's showing a lot of weakness, and you know, I'm pretty much guessing that this thing's going to fall again. It's going to fall down, and it's going to fall fast. So let's let that do that. We'll come back in a minute and watch that drop. We'll see it happen. NIO. Let's go back and see what NIO's doing. All right, NIO had a little bit of a dump, came back up, tried to pop up over it again. Looks like it almost did, not quite. This is a 1 minute dump, so it's not as significant. Our stochastic still has room to move here based on the price action. So this needs to break above, what was the high? 40.34. 40.34 was the high of this original red candle. So if it breaks 40.34, we'd be looking for 40.36 because it's 2 cents above the resistance. We want 2 cents above resistance. There's 35. 2 cents above resistance, 5 cents above whole dollars and half dollars. So 40.35. We want 40.36. There we go. It broke 40.36, and what did it do? Took off. So stochastics are still going up. We're probably going to have a bit of a rally, end of lunch rally here. It does have a lot of room to move on the price action. It is coiling up as well. Let's look at this coil here. So we've got a bit of a coil. Got a bit of an upward coil here. So we're going to remove these, redraw some lines. All right, we've got a bit of an upward coil, which is pretty bullish. You know, so we have to pull out and watch our stochastics. Let's look back at our 5-minute stochastics, see where we're at. Okay, so it came down, went up, came down, went up. So it's got a little bit more room to move to the upside before it decides to turn around and the stochastics to drop out the bottom. Not much room, probably just enough to get it up to the 448 mark, right under 450. Probably just enough steam to get it there on the 5-minute chart. Now, pull back to the 15. The 15-minute has a little bit more room to go a little bit further, right? Because it's only about halfway, a little over halfway. So based on that, what's most likely going to happen, just from looking at this, is it's going to test this 445 mark, maybe turn around a little bit, and then maybe break up over it. But right around 460, The stochastics on the 15-minute, if it continues in the way that it's going right now, it's going to be a little too hard, too overextended for it to break past. So we're just basically seeing a sideways triangle, a sideways coil, essentially, is what we're looking at. So let's let this happen. We're going to draw it back to the 1 minute, so when we come back, we can see what's going on. And we're going to check out Apple. What's Apple doing? That's a whole lot of red right there. Look at all that red. That is a lot of red. A lot of red candles. Boom, boom, boom. A little bit of green, a little bit of green, a lot of red, a lot of red, a lot of red. Yeah, so this, I mean, the stochastics is all the way down, so it might go slowly, you know, but we could have a real dump to the downside here. Like I said, Apple likes to ignore the stochastics sometimes, or once it goes to the upside, it gets overextended and it stays overextended for a while. So 153.83, 153.90. You got one guy that just bought a bunch of shares because he's an idiot. Essentially, this is telling you, just by looking at it, the trend has changed. I mean, you can just look at it and see lower lows, lower highs. It is no longer in an uptrend, right? It's now in a downtrend. So it's got to break 154.06 again, this last high, to reverse that. And I don't think it's going to happen just based on these lines that we're drawing, because it's got this upward trend line is kind of like a magnet, right? It's a magnet. And the further away it gets from that upward trend line, the weaker the magnet becomes. You know, it's just like in real life, you have a magnet and you're holding a piece of metal further down away from this trend line. So the further away you go, it's like it's non-existent anymore. But the closer you are to it, you sucks it up to the trend line, right? That's how trend lines operate. So here's this downward trend that it's about to hit again that I just drew, right, in like 2 seconds while I was talking to you guys. It's not even accurate. Look, it's not even like touching. I'm not even trying to do it good. I'm just doing it quickly. If it breaks down past this trend line right here, to 153.50 we go. So this is happening, whether you like it or not. Hopefully you don't own Apple right now. If you do, you know, just average in when it hits 153.50, or pull back on the further day chart and see if it has somewhere else you can purchase in at, like maybe 150. 150 would be a good price if you're not going to sell it right away, if you're going to hang on to it for a long time. But at the end of the day, this is still in an uptrend, you know, so it does have room psychologically, psychological levels. It broke 150. 155 is sort of hard rejection because that's another psychological level, but it's still north of 150. Honestly, the strongest psychological level is going to be like 175, 160, 170, 175. 155, yes, it is. But it's going to wane a little bit, still creating an upward coil, an upward pennant over the longer term here. So if it comes back to test this 154 in the next couple of days, then it's going to 150 or 160. I'm sorry. So that would be this would be, you know, I'm looking to buy some call options for the next month out or so for the 160 range. So when this drops down to wherever the low is, wherever I think the low is going to be, which today looks like 153.50, could break down below that, which if it did, I'd reassess. But in this 152 to 153.50 range is where I'm looking to buy some call options to the north for Apple. Now let's go back and look at NIO. So stochastics have fallen real hard, and see now it's creating a new triangle for us. It's creating a new triangle and trend line for us to work off of. So it broke this to the downside, this uptrend, it broke it to the downside, as you can see, this trend line that I drew. Broke it to the downside, and it plummeted shortly after. Now this is only the 1 minute, and this is only a what, like an hour's worth of trend. So basically the last hour's worth of trend, they're like, nah, the people in the last hour, y'all are idiots. That's what happened there. Now, it doesn't mean that it won't turn around because it still has all these moving averages, and the longer term still points it in an upward direction. You know, just over the past 2 days, as an example, 40 $40 even, 40.05, super strong support. So remember we talked about that magnet? Well, if it breaks past this, it's going to 40. It's also true for the upside. We got 41.02, right? This would come across to here. So it's further away from this magnet here, 40.90. It's further away from the $41 magnet than it is from the $40 magnet. So there's a good chance that it's going to come hit this $40 magnet. Like I said, there is support around 39.70, but if it breaks down below this, then it's creating a downward trend. And that's not something we want to see because I have call options. So let's just continue to watch it. All right, so as you can see, the stochastics were super overextended on NEO, and the stochastics plus the, what is this, the 50-day moving average, or the 100-day moving average. The stochastics plus the 100-day moving average. So it dropped down and hit a spike bottom, right? Almost a doji, but spike, and then tried to reverse based on the stochastics being overextended and it hitting the moving average. So the stock is saying that it wants to turn around. And there's another one. It's saying that it wants to turn around. And also the RSI is pretty low as well, which is the relative strength index. So essentially, we have a couple of indicators saying that this is going to turn around. It did sell down on volume, right? Down the bottom of this peak, we've got volume spikes at the bottom of this right here. So we have a lot of people, most likely there's a lot of people right here that are saying, oh, there's the bottom of this new low. Let's buy it, right? So it gets a little scary when that starts happening because those same people might sell off if it breaks down below this support level here, right? But because we have such overextended stochastics and RSI, I'm pretty confident this thing's going to turn around and go back up like a magnet, at least to this 40.27 area. Now, one thing that's happening too with NEO is as it's going back up to this 40.25, 20.47 area that I just said it was going to go to, the stochastics is raising up relatively quickly with it, right? So it means that the stock is losing steam, essentially. Right now, it could rally. It could rally. If it reaches significant points, it could rally. It did create sort of a swooping, I forget what this is called, but it broke 427. It broke it strong. And it's got this sort of U shape to it. The U shape is usually good, right? Whenever you see this U, there's a couple of different names for it, but that's usually a strong indicator that it's going to continue to whatever direction it's sort of swooping to. So the stochastics aren't quite overextended fully, but I don't think there's enough steam left in them for them to break above the 440. So it'll most likely come up here to this 433-ish range and then slow down, sort of turn around a little bit, and then test it again. So we're going to keep watching it. You know, another thing that could happen as well is hedge fund manager comes in and dumps the stock down, busts it down below, and then the stock just tanks and does, you know, basically a giant sweeping reversal on it, creating a head and shoulders pattern with 3 heads, 1, 2, 3 heads. So that's always a possible scenario, and that's always a risk that you run when you're trading stocks. But that's why you keep an eye on it, and you watch on the 1-minute chart, and you see some, you know, butthole hedge fund manager that wants to short everything and crap everyone out of a stock. You got to keep an eye out for that. You got to know what that looks like. We could get into level 2 trading, but we're not going to look at that today. Right now, we're just looking at technical analysis and predicting the stock predicting the stock price and the stock direction. While this is running, let's look at Apple as well. Apple looks like it tried to turn around. It tried to turn around, didn't quite pop up over this 154.05 yet. It is coming up, taking a breather, and then going to try to go up above it again. It does have some downward signals to it. You know, it is in a downward trend, so it'd have to break this downward trend to be able to continue forward, continue up, which it's right at. You can see it came and touched the tip of this downward trend. So if it breaks above this 154.05 mark, then it's going to fly through the moon. And it's closer to that than it is to the bottom of the trend line. So like a magnet, it's going to be drawn to it. And then drawn to the 200 moving average, or 100 moving average. So there's a good chance this might actually have a little reversal here and turn around. Their moment in time, the SPY and the QQQ are both kind of ripping a little bit. They're both kind of going through the moon. So there's a good chance that the market flying up as it is will influence Apple going into this formation, because it only has, what, 4 cents, 3 cents that it has to meet to be able to complete this formation. So while we let that play out, let's look at NIO. NIO still trading inside this trend line here. Looks like it may have actually just broken down past it. Listen to the right. It's right at it. It's right at it. I didn't draw it the most perfect, but as you can see, the trend line wraps right in. Let me redraw this. The trend, this little short-term trend line wraps right in across the close, lands right onside the moving average. So it's pretty strong support. If it breaks through this, falling, right? Stochastics are down pretty low. So we want to see this reverse and pop up over this candle. We have a strong red candle. So now we need to see a strong green candle to counteract it. Don't know if we're going to get it here. But based on the stochastics and the RSI, it's entirely possible. And it doesn't look like it's going to happen. So the stock's going to fall. So now it's going to see if it can complete a head and shoulders pattern. And if it does, well, then I just lost some money on some call options. Not really. I'm playing them longer term, so I can hold them for a bit. But short term, predicting the stock price, this is how you do it. This is how I do it. I feel like this is already a pretty long video, so hopefully I explained some things to you that helped you. If you guys want to see me trading live, I probably could do it on a Thursday or a Friday or maybe a Monday. Let me know. I'll definitely see what I can do about it. There's some more technical analysis. I can make another video explaining all the different formations if you guys like, so you can catch them. There's a lot more that goes into predicting stock price than just the formations, but these are pretty strong indicators that kind of tell you where everything's going, what direction they're moving in, as long as you know how to read the chart properly, which is the hardest part. No, I take that. The hardest part is not predicting which way the stock is going to move, where it's going to stop, where it's going to turn around. That's not the hard part. The hard part is having the discipline to be able to stick to your guns whenever you do find a formation, whenever you do find something, signals that are telling you one thing or another. That's the hard part. Let's take one more quick look at Apple and see what it's doing. So it broke through the 154.07. So this is going to go up. Now the magnet is pulling it towards 154.23. Now the magnet is pulling it up. See? It did complete this head and shoulders formation. It's not a perfect head and shoulders. I mean, it's pretty close. It's like a head and shoulders like formation. You know, it sort of looks like a head and shoulders. So that's going to play a lot. Basically, that's giving you an idea of what's going on in the psyche of people that are trading, right? They're based on human psychology. So this gives you a pretty good idea of what's going on the psyche of the masses of people that are trading this. So it's bullish right now. Right now it's bullish, and it's at the tip of something. They're like, oh, this is it. This is the one. That's basically what this is saying, what the overall feeling of this stock is right here at this particular moment in time. So now it's going to go up probably to the 154.15 mark, right in that range, 154.20, something like that. 54.21. You know, it wants to push to that psychological level. There goes our first red candle. This upward trend line is a magnet. So you have this upward trend line pulling it like a magnet to this trading range right here. So lots of strong green candles on the 1 minute chart, right? And then we have our first top of trading range, right? It's still a little bullish. We have our first candle that's telling us, no, maybe we should slow down, right? But it did break above this original thing to the downside, this original dump down. And 154.22 is the next dump down. So it's right at a point of, are we going up or are we going down? That's where it's at right now. Look, you've got an indecision candle there and it's going down. That's why that is happening, because all of these indicators that are sort of in the way, right? It wants to go to this range right here. It wants to go to the bottom of this. And if it does at this point, it's going to break through, because that means it's got a lot of solid strength behind it. But our stochastics has been overextended for a minute. Our RSI is pretty overextended. But like I said, Apple likes to ignore the stochastics and the RSI sometimes. Sometimes it just rallies and it just goes. You can't count them out. But in the short term, at least, this range right here is going to give it some resistance. So it might get rejected a little bit and come back and retest it. So I feel like I've pretty much accurately predicted what's going to happen with stocks over the last couple of hours. Now, I've shown you guys how to predict them, right? You can do this on your own. You can, as long as you understand how to read the stock charts, then you can figure out which direction they're going to go in, how far they're going to go, when they're going to stop, when they're going to turn around, at least with some kind of accuracy. You may not be right every single time, but you're going to be right long enough times to be able to make money on it. So what I'd recommend is paper trading, trying this. The emotions is what gets in the way. The hard part is not predicting the stock. The hard part is being able to make the decision and do it without emotions. Do it based on just a number. Play it like a video game. If you play this stock market, like a video game, you're going to do just fine. I didn't want to charge my battery and put my camera on and stop the recording while the stock market is moving and live and everything. If you guys want me to do live trading, let me know. I'll do what I can. The Apple's going to come down. It's going to bounce off of these moving averages and then hopefully come back up to this 154.27 range. And if it does, then it's going to continue to test this 154.63 number. You can check me later if you want. You can look at it and see on the stock chart. It's currently 9.3. It's at 122 when I'm saying this. It's a stock prediction, you know, and it's a very short-term stock prediction. It'll probably go up, touch it, come back down. But I'm basing that off of technical analysis, nothing else. I'm a strong believer that if I draw the line, the stock chart will move to it. So just draw some lines and watch the stock chart move to it. So hopefully that helps. You guys have a good rest of the day. We'll see you in the next video. Peace.